5 of my stocks reported earnings after the bell, okay? How many of those stocks are down after hours? Not 1, not 2, not 3, not 4. All 5 flipping flapjacking stocks are down after hours. You got to be kidding me, okay? We got to go through the numbers. I got to tell you what I'm planning on doing with these stocks. Am I going to sell them? Am I going to buy more? Am I going to just hold, okay? A couple of these companies had great earnings and are still going down. A couple of them had dumpster fire earnings. One of them was kind of okay-ish. So we're going to go through this across the board. Hope you guys enjoy. So I always appreciate you joining me. Thanks for being subscribed, folks. A lot to get into in this one. You know, I think the stock market god said, you know what, Jeremy, you've had it pretty dang good the last 9 months, but you know what? That's about enough of that, okay? Now you're going to pay the price. PayPal. PayPal's first up here, okay? So PayPal is a position I've been building very, very heavily. I've been buying shares pretty much as fast as I possibly can. These are the shares I have in the public account, a little over 6 figures worth in the public account. I also have shares in other accounts. I've just been buying the stock very aggressively, specifically like the last 3 months. I've been buying every share I can possibly get in sight in regards to PayPal, okay? Now, stock's down after hours. I've seen it down as much as 8%. We'll see where the trading day ends up at tomorrow. But let me just say this right off the bat. This is the biggest gift I could possibly imagine to me personally and to anybody interested in PayPal stock. This move after hours is the biggest dang gift you'd ever get, okay? So to go through the numbers, right? Total payments volume was up 11% on a year-over-year basis. Net revenue is up 7%. Now, I have that in blue, and the reason I have it in blue is, you know, for PayPal, that's just okay. That's not great numbers. PayPal, you know, when they're reporting really good numbers, we're talking double-digit revenue growth. 7%, meh. Okay, it's meh for PayPal. A lot of other companies will gladly grow 7%, but for PayPal, meh. That's the way I would put that. Now, the good news is we've been going through a goods recession, obviously. I do believe this goods recession is coming to an end and things are going to get better from here for the goods economy. So I do believe that will help out PayPal substantially. Now, operating margin in terms of their revenues, okay? Operating margin was up 432 basis points on a year-over-year basis, which is basically just a fancy way of saying 4.3 percentage points. If we look at net income, are you kidding me? Net income was up 402% year over year. But remember, that's on a GAAP basis. So last year they had some expenses in this quarter. So it looks incredible. But if you look on a non-GAAP basis, 19%. Okay, still, that's phenomenal. I still want my companies growing net income faster than they're growing revenues. EPS on a GAAP basis, generally accepted accounting principles, was up 414%. If we look at non-GAAP numbers, revenue, same 7% growth. Operating margin on a non-GAAP basis up 228 basis points. Net income up 19%. EPS on a non-GAAP basis up 24%. Those are phenomenal numbers, okay? Other than revenue, like I said, revenue is just okay? Clearly the company's getting in a better spot. And the best part of this is, you know, I think we got a lot better numbers coming for PayPal over the next several quarters and as we get into 2024. Now, I believe a big reason why this stock was down after hours is I believe the algos, unfortunately, are not too intelligent, okay? The algos look at free cash flow and they're like, oh my gosh, whoa, the free cash flow is super negative. Yeah. Read the fine print, okay? Read the fine print. Reflects the impact of a reclassification as described in our earnings press release February 9, 2023. Q2 2023 includes a $1.2 billion negative impact from the European buy now, pay later loans originated as held for sale, expected to be sold in second half 2023, okay? So nonetheless, folks, that number on a non-GAAP basis is what it is, but it's just understand it's a lot of one-time factors in there, and that's not going to be reflected moving forward in terms of that sort of negative number, okay? Now, when it comes to PayPal, the great news is the stock trades dirt cheap, right? We're trading about, well, if the stock's down 6-7% tomorrow, which I don't know. I think there's a decent probability PayPal is actually going to come back during the trading day tomorrow. I don't know if it's going to finish green, but I wouldn't be surprised if this baby comes back because I think there's a lot of people salivating over this one. Okay, let's just put it that way, including this guy right here. So if we look at a forward P, trading about 15 times this year's numbers, you can say maybe as of tomorrow, we're trading somewhere in the 14 range. Next year, trading about 12 to 13 range. Very, very cheap. And obviously, even if the company was to only grow 7% a quarter, if they're growing net income double-digit percentage, like Like, that's so cheap for PayPal, it's not even funny. So dang cheap for the stock. It's dirt cheap. I mean, beyond dirt cheap for a company like this, right? Never mind what happens when the numbers start to get better in terms of the revenue line item, right? Now, also, this is very important here, okay? Very, very important. Check this out. Q3 2023 off to a strong start with accelerating revenue and total payment volume growth in July. Revenue growth accelerating to 9% on an FX neutral basis in July, with low teens FX neutral total payment volume growth, including low teens. So what are we talking? 13, 14%, something like that, including 8% FX neutral branded checkout growth. Q3 2023 revenue is expected to reach $7.4 billion based on current exchange rates growing 8% at spot and FX neutral. Q3 2023 non-GAAP EPS expected to be $1.22 to $1.24, growing 13 to 14%. Very strong growth. Once again, EPS far outstripping revenue growth. I love that. That is phenomenal news, okay? They're reiterating their non-GAAP operating margins, EPS, and free cash flow guidance. All extremely important, okay? So nonetheless, next quarter numbers should be looking, once again, this gets into, I've called a bottom in goods recession over the past few weeks, and I believe the goods recession is now over, and I believe, at least for the next several quarters, we're actually going to see a reacceleration of the growth side, of the goods side of the economy. Goods side of the economy meaning like physical products, e-commerce companies. I think we've seen a bottom in all those retailers, and we're going to see actually their revenue start to accelerate over the next several quarters. And the reason I believe that is because consumers in a far better place than they were at this time last year. Real wages were still going down last year. We finally got real wages starting to go up again. Inflation is becoming less of a problem. Wage growth has been very, very strong. Unemployment market, unemployment rates are pretty much the lowest in history right now. So when I look at that across the board, I'm expecting, and on top of that, people just aren't making a lot of those big ticket purchases that usually take a lot of money, a lot of, new homes, new cars, all that sort of stuff. And so right now we're just getting kind of a sweet spot that I think the good side of the economy is going to increase quite a bit. And based upon what PayPal's telling us, what's going on in July, I'm 100% accurate on that. We'll see. Based upon Meta's earnings and their guidance, listen to Meta's guidance they gave. Based upon Meta's guidance, that smells like good side of the economy is going to come back, okay? Now, there's a couple ways to play PayPal stock, right? One is you can just buy the shares straight up, right? That's the safer bet in my personal opinion, right? Just buying PayPal stock. If you love this stock for the long term, throw it in the filing cabinet, hold it over the next several years. It should be a very, very nice moneymaker based upon how low the valuation's trading at right now, based upon the fact that we're talking about a company that's growing their bottom line quicker than they're growing their top line, and the top line should start to accelerate growth as we go into the remainder of this year and as we go into next year. When you look at that across the board, that's a pretty appetizing thing going on. So you can just buy the share straight up, which is what I've mostly been doing. But the other opportunity, if you like to take a little bigger risk on a stock like PayPal, and you want to take, let's just call it, you want the opportunity to make even more money on this one, this stock has December 2025 calls out there, right? This is higher risk, right? Because you need the stock to be a certain price by a certain date. You have a little less than 2.5 years to play with here in regards to this. But I mean, the pricing is pretty darn attractive, okay? Look at this. So, $70 strikes. And once again, this expires December of 2025. So we're talking about, even if you were thinking, there might be weakness in the market in the short term or something like that, you have so much time to play out here, right? And remember, you can sell out of these options at any point. So let's say, hypothetically, you're looking and you're saying, you know what, if the stock spikes huge over the next 6-12 months, they announce a new CEO, there's a lot of momentum, stock spikes to $100, $120 a share or something like that, and you're like, that's good for me, I want to dip out, then you can dip out and you can obviously sell with a massive, massive profit at that point in time. You don't have to hold this all away until December 2025, and I think that's important for everybody to understand, okay? So $70 strikes. As of tomorrow, will probably be priced somewhere around $20 a premium, I would say. So which means you need the stock to be about $90 roughly to break even if you're going to hold these all the way till expiration. I don't think that's a stretch. Let's just put it that way. And for every $20 above $90, right, you're going to basically make your original investment back again and again and again. And so obviously if the stock goes to $200 or $300 over the next couple of years, you're looking like really, really dang good, right? And you would have certainly made good money if you just held the stock straight up, but this is just kind of like an extra play here. This is something I should have taken more into account last year with Meta. Whereas Meta last year, I was only buying the shares straight up. I should have been buying some leaps along with the shares. Not a ton. I could have just bought like $20,000 or $30,000 worth of leaps on Meta. And I mean, my profits on those leaps would probably be in the 700 to maybe 1,000% gains right now if I'd been buying some leaps on Meta. Like I said, not a lot, just 20, 30K. I'd probably be looking at $200,000 to $300,000 worth of those leaps right now at this point in time. It's just last year I was so like risk adverse, I couldn't even think about like leaps at that point in time, right? The other price point I think is interesting is $100 strikes here. You have to pay about $10 for those, right? But obviously, if the stock does go beast mode and it goes back to its former glory days of $200, $300 stock again, the profits you're going to make on that are absolutely astronomically high over this next 2.5 years, right? So that's certainly a potential there overall. And, so to finish out thoughts around PayPal, and I'll recap all these at the end for sure as well, right, this is a huge buy the dip opportunity. This is the biggest gift ever. I will be actively buying PayPal stock out there this week. I thought those numbers were very good. I'm very pleased with the company. And I think this is actually one of the best earnings reports probably in the earnings season I've seen so far. There's a lot of companies reporting some pretty type numbers. This was not that quarter. This is a very, very good quarter across the board, okay? Next up here, Cheesecake Factory, number 2 of these 5 stocks that just reported earnings. So Cheesecake Factory, another stock I've been buying very heavily. I own the stock in the public account. These are the shares I'm showing you here. I think I own these in private accounts. I own these in my dividend account. I've been buying this stock, very heavily the past few months, okay? This is one I'm trying to add aggressively as well. Also down after hours, very slightly. This one I think is probably going green tomorrow. Outside of a scenario where the market's down huge, I think it's probably going green. The earnings are phenomenal. I'm still going to have to listen to a conference call tonight, but these earnings of these 5 stocks, it's a real debate if this was the best earnings or if PayPal was the best earnings, but these numbers are phenomenal. Okay, let's just call it what it is. Revenues grew very nicely on a year-over-year basis. They grew revenues a little over $30 million on a year-over-year basis here. As far as food and beverage costs, that went down for the company, went down by 1.3 percentage points, or a fancy term, 130 basis points. If we look at labor expense, man, a lot of companies, labor expense is actually climbing right now. Labor expense for Cheesecake Factory actually went down on a year-over-year basis. That's good. Other operating costs and expenses went down in terms of the percent of revenue, right? General administrative went up a little bit as a percent of revenue. That's why I have it blue there. Income from operations went up substantially as a percent of revenue. That's phenomenal news. Up to 5.5% of revenue made its way down to income from operations. That's versus 3.4% at this time last year. That's insane, okay? That's absolutely insane. We're talking about 210 basis points of growth from income from operations. That's not a number you usually see from companies, okay? Not usually a number you see. That's phenomenal. Net income to 4.9%. They almost are at 5% of revenue reaching all the way down the bottom line, which is a great number for a restaurant. If you can talk about hitting that 5 to 7% number in terms of, how much of your revenue reaches down to your bottom line is for a restaurant, that's freaking amazing, okay? And so I think it's a possibility that Cheesecake could get to those sorts of numbers at the end of this year. Now, at this time last year, that was 3.1%, right? So huge, huge uptick in the business overall in terms of how they're running this business, right? Now, this is extremely important right here, okay? The company has total available liquidity of $330 million, including a cash balance of $91 million and availability on its revolving credit facility of $238 million, right? So clearly the company can keep building out restaurants, which, they still have a lot of opportunities for growth here. The company also repurchased 280,000 shares of its stock at a cost of $9.3 million in the second quarter. In addition, the company is, going to pay out another 27 cents per share you own of Cheesecake Factory on August 29, 2023. I'll take that money. Thank you very much. I'll go ahead and probably buy some more Cheesecake shares with that money overall, okay? Now, If we look at the breakdown per restaurant, Cheesecake Factory grew about $12 million on a year-over-year basis in terms of revenues. North Italia, which is its phenomenal growth engine, that's the business I'm most excited about that Cheesecake Factory owns. They grew revenues nearly $10 million on a year-over-year basis. On a percentage basis, run the numbers on that. It's incredible. Other FRC, which is their other concepts, $65 million versus $60 million. So they grew that about $5-6 million on a year-over-year basis. And other grew very nicely as well. Income from operations. A huge uptick for Cheesecake Factory restaurants. Very nice uptick for North Italia. Other FRC was a little bit of a holdback there, and obviously income from operations up substantially year over year. So the company is basically getting to far more profitability now at this point in time than versus where they were at last year, which is not a surprise to me. This is what I called out several times when I talk about Cheesecake Factory. I said their margins are about to expand quite dramatically, and their profitability is going to expand quite dramatically. They had to go through, obviously, ridiculous inflation that on the wage side, on the product side, just last year was a complete disaster if you run a restaurant. And now all that's going away, and so what ends up emerging for Cheesecake Factory is a company that's going to be far more profitable, and margins going to be far better for this one overall. So Cheesecake Factory, love this one. Easy buy the dip opportunity if it even dips, which once again, I'm not even so convinced it's going to even dip tomorrow. We'll see, okay? Revolve. So next one up here. Number 3 of these 5 stocks that just reported earnings, Revolve. Oh man, okay. So right now I'm up about 41% on my shares in the public account for Revolve. I'm going to call it what it is, okay? The quarter was a dumpster fire. As much of a dumpster fire as AMD's earnings were, no, not that much of a dumpster fire, but then again, AMD's earnings were so much of a dumpster fire. I don't know if we've seen that big of a dumpster fire of a quarter, okay? Revolve numbers were pretty dumpster fiery though, let's call it that. Stock's down 8% after hours. I think it deserves to be down 8% after hours, okay? The numbers were not impressive at all, right? Net sales were down about, we could call it about $16 million roughly on a year-over-year basis. Operating expenses, ultimately went down less than revenue went down, which is not something we really want to see. Net income dropped substantially. EPS dropped substantially. We're talking over a 50% drop in profitability for the company overall. Not good. Not good earnings. But we've been in a goods recession. I do believe things are going to get better for Revolve in the back half of this year and as we go into next year. So that's the good news. But the bottom line is these numbers they just put up for this past quarter are pretty dumpster fiery, okay? Now, the company just announced a $100 million share buyback. They have cash loads to the sky right now. Revolve, as of the end of this quarter, had $269 million in cash and cash equivalents and no debt. So, do I approve of this as a shareholder of this stock? 100%. This is the best decision the company can make right now, okay? At the end of the day, they can't control if you're in a goods recession or not. Their business is likely, in my opinion, going to improve in the back half of this year in terms of that top line, which will, in my opinion, help the bottom line, and especially as we go into 2024. So they can't control the ups and downs of business, but they got all this cash sitting around. They got no debt on this company. Their share price is super cheap right now, which I do not believe is going to stay super cheap forever. I believe they probably got 3 to 6 months of buying these shares under $20, and that'll be about it. That'll be about it, in my opinion, in regards to that. And so this company needs to not just buy these shares back, but they need to do it aggressively. They need to buy back shares aggressively this next 3 to 6 months, in my personal opinion. If they want to get as many shares as possible under $20 a share, they need to try, obviously, not to spike the stock price, which is hard because Revolve's a smaller market cap company. But this is, there's certain time periods when a company announces a share buyback, and I don't agree with it. I'm like, I think we could use that money here or there, doing this or doing that. I 100% back this overall. Now, in terms of next quarter, gross margin, they're expecting on a little bit of the lower side compared to previous guidance. Fulfillment expenses also slightly worse. Selling and distribution expenses slightly worse. General and administrative expenses a little on the higher end, okay? So not a disaster in terms of that, just slightly worse than kind of expected. Now, when it comes to Revolve, the great news is this company's trading at about a 23 forward P. For a company that I believe, next year is going to be able to accelerate EPS in a substantial way in revenue. Here's a deal with Revolve, okay? This company, in my personal opinion, is going to have extremely easy comps next year, right? Because they're going to be comping against all these goods recession type quarters. And I think ultimately at the end of the day, that's going to be a huge tailwind for the business, for Revolve. And I think it's going to put them in a really, really good position. Remember, they're going to likely take a lot of shares off the market as well, which could definitely help out their earnings per share because there's going to be less shares counted against their net income. So I think you're going to have an interesting dynamic where they're going to decrease how many shares are outstanding in a substantial way over this next, let's call it 12 months. But meanwhile, over this next 12 months, their net income is going to increase quite substantially. And so we're going to end up in a very nice dynamic when it comes to earnings per share. So overall, I think their earnings per share growth could be pretty darn phenomenal for the next probably 12 to 24 months, regardless of the economic climate. And so I'm really, really, excited about Revolve's long term. It's just they had a dumpster fire of the quarter in a short term. Okay. Now, while we're on this, the subject of dumpster fire quarters, Qualcomm. Qualcomm's a stock I own in my dividends only account. I'm up 94% on the stock. Okay. And that doesn't include all the dividends that Qualcomm has paid me out in the past, right? So in regards to Qualcomm here, this was pretty bad, okay? Total revenues came in at $8.4 billion. That's for almost $11 billion at this time last year. So we're talking about $2.5 billion down on a year-over-year basis. Operating income, awful. $1.8 billion when it was $4.4 billion at this time last year. Net income, $1.8 billion versus $3.7 billion at this time last year. Earnings per share, earnings per share (EPS) on a basic basis, $1.62 versus $3.32 was versus $3.32 at this time last year, right? So it's about a 50% type drop. Numbers are bad, really, really bad from Qualcomm. Dumpster fire, absolute dumpster fire in regards to Qualcomm. And here's why this matters. It matters substantially not just for Qualcomm, but here's the deal: if the end markets for Qualcomm is really weak right now, it could be a sign that Apple's very weak right now, which could affect Skyworks Solutions business models and Cirrus Logic business models, Texas Instruments business models. You can go down the list, okay? Broadcom and all those chip stocks. So we're just in a bad time period for that whole industry, and at some point that will end, but it doesn't look like it's over yet. It could be another, and I don't expect handset shipments, so basically means smartphones. I don't think we're going to have some sort of huge boost next year either. I've looked at the breakdowns, the teardowns of the next generation iPhone that's going to be shown off to everybody in about a month and a half from now. I don't think it's going to be very surprising to folks. It's basically the same damn phone, okay? And they haven't had changed up the iPhone in any substantial way in several years now at this point in time. So I think this iPhone's just going to put up decent numbers. I don't think this is going to be one of those that gets everybody going. Oh my gosh, this new iPhone, I got to go get it. I got to be the first one in line. It's not going to be like that. So overall, I don't think this industry is going to be in a great place anytime soon, really. And so that's kind of my thoughts in regards to that, right? Qualcomm, not in a good place. Shopify, this is a stock I'm up about 34% on right now. I own shares in the Patreon portfolio, which, by the way, this Patreon portfolio, you can support the channel. Check out the description area if you want to join in there. And you get to see all the moves I make in there, all the stocks I'm buying and selling in the Patreon portfolio. If you want to be part of that, it's like $19. It's a no-brainer to be part of that. And Shopify is one of the stocks I own in there. I'm up 34% on the shares. These earnings, oh man, I got to say, pretty impressive. Subscription Solutions was up substantially year over year to $444 million in this latest quarter from $366. And remember, we just went through a goods recession that I believe we're coming out of now at this point in time. So all these numbers you're seeing from Shopify, if anything, they're going to get a lot better over the next several quarters, okay? That's where things get really fun. Merchant Solutions, $1.25 billion in this latest quarter versus $929 at this time last year. They did almost $1.7 billion of revenues versus a little less than $1.3 billion at this time last year. Gross profit came in at $835 million versus $656 at this point last year, right? Sales and marketing, they kept that in check. R&D, they were spending a fortune on R&D. Now, I don't think I should doubt Toby. He's been an amazing CEO of the company, but damn, they better have some really freaking exciting products coming over this next few years. That's all I got to say, because they are spending an absolute fortune on R&D. This is no small amount, and that's no small increase. That's a substantial increase. So I don't know what Toby's got going on and the management team has going on, but they better have some damn exciting stuff coming over this next few years. That's all I got to say about that, because they're spending a fortune, okay? No, it looks like some huge loss. It's not like that, okay? Look, they have an impairment on sales of Shopify's logistics business that was kind of like a one-off type thing of $1.3 billion there. So it obviously made the net loss look huge. Things are in a far better place than it looks on paper there, okay? Now, in terms of Shopify, stock's not doing too much after hours. It's slightly red. You know, there's another one because of the revenue growth here in what the long-term profitability of Shopify's business model will likely be, especially now that they're getting this business back to an asset-light strategy. I wouldn't be surprised if it goes green tomorrow. We'll see how it shakes out, and a lot's going to depend upon, you know, what the vibes are of the market tomorrow, but I wouldn't be surprised if it actually turns green. Obviously, the stock looks like it trades extremely rich, but this is a company at infant stage profitability when we talk about, you know, what they should be putting up for, you know, EPS numbers over this next couple of years. So Shopify, great company, great revenue growth, and honestly, they should see accelerating numbers in terms of top line and bottom line over the next many years, honestly, many years. So to recap here, PayPal. Now, this is a huge buying the dip opportunity. That's why I have 5 exclamation marks here. Huge buying the dip opportunity. Shopify probably just chilling on this one. If it was to go down in any substantial way, I'll probably buy more shares. Qualcomm, I'm chilling on that one. I'm not expecting any sort of major comeback in the industry anytime soon, to be honest. Cheesecake Factory, I have 2 exclamation marks. That's a buying the dip opportunity. And Revolve, I have 1 exclamation mark. That's a buying the dip opportunity there. Woo! That was a lot of earnings, okay? Appreciate everybody joining me as always. I got a free workshop for you guys, how I find 10x stocks. So that's going to be pinned comment down there if you want access to that. Enjoy that, learn lots, take advantage of deals out there in the market. There's so many earnings. That was just 5 stocks. I personally, the amount of earnings that just came out after the bell, ridiculous. Tomorrow, Amazon, Apple. Oh my gosh. Much love and have a great day. Thanks for being subscribed, by the way. Appreciate y'all.